fully ready to read. Welcome back to Crypto Updates, your home for the fastest, sharpest, and most powerful insights from the world of digital finance. If you're new here, hit that follow button because today, the crypto world has been shaken to its core. Markets are bleeding, Bitcoin has crashed again, and more than $1 trillion has vanished from the global crypto market. Yes, $1 trillion. And the storm isn't over yet. Today, we're going to break down this entire collapse, what triggered it, what's happening right now behind the scenes, how this affects traders, and what could happen next. So sit tight, because this is one of the biggest crypto breakdowns of the year. Let's begin. Bitcoin has plunged all the way down to $88,522, reaching its lowest point in 7 months. This isn't just a dip, this is a massive breakdown in the world's largest cryptocurrency. And the rest of the market? The entire digital asset universe, which was valued at $4.3 trillion in early October, has crashed down to nearly $3.2 trillion. $1 trillion wiped out like dust in the wind. And the shocking part is, this collapse didn't happen slowly. It happened violently. On the 10th October, more than $19 billion worth of leveraged positions were liquidated in a single day. Just imagine the scale of panic. Millions of traders caught off guard, exchanges showing red everywhere, margin calls popping up nonstop, buyers disappearing, sellers flooding the market, a perfect storm. Earlier this year, Bitcoin was riding two powerful waves, hope for interest rate cuts and massive institutional adoption. But now, both waves have lost power. Rate cuts look uncertain, institutional flow has slowed down, and retail traders are confused, scared, and reactive. So the big question, why did this crash happen? The first and biggest reason is macro pressure. When the Federal Reserve keeps interest rates high, investors avoid high-risk assets. Crypto, being the riskiest of all, gets hit the hardest. No matter how strong the hype is, macro always wins. Second, institutional investors are stepping back. Earlier, big companies, funds, and corporate treasuries were entering crypto aggressively. Now they're hesitating. Uncertainty has killed momentum. Third, the market was overloaded with leverage. Too many people were trading with borrowed money. One sudden drop caused a chain reaction, liquidations after liquidations, pushing prices even deeper down. And then comes the psychological factor, whales. Whale movements can either build confidence or destroy it. Right now, analysts say whales are repositioning, making investors even more nervous. And when panic enters the crypto market, it spreads like wildfire. Now let's talk about what this collapse means for the future. This crash is not just a correction, it is a reality check. The market is resetting. Overconfidence is dissolving. People who believed Bitcoin only moves in one direction, up, are now realizing the truth. Crypto is powerful, but crypto is dangerous. Does this mean the bull run is over? Not necessarily. Some analysts believe we may be close to the end of the selling phase, but they also warn that the market could drop further before it builds a solid base. This is not the time for blind optimism. This is the time for sharp awareness. For traders and investors, here's what matters right now. Protect your capital. Manage your risk. Avoid emotional decisions. And do not over-leverage, ever. Crypto rewards patience and punishes impulsiveness. Bitcoin's next key levels to watch are around 85,000, 80,000, and the long-term support near 74,425. If macro conditions soften or if institutions re-enter strongly, the market could bounce back. But until then, caution is your best tool. To sum it all up, the crypto market has just witnessed a historic $1 trillion wipeout. Bitcoin is at a 7-month low. The world is watching. The market is shaken, but not broken. And the next few weeks will decide whether this was a temporary storm or the beginning of a deeper correction. Thank you for watching Crypto Updates. Stay sharp, stay informed, and stay safe.